Alright everybody, hello and welcome to Nadex. My name is Philip and I will be once again your presenter for today's webinar. Today we want to have a look at trading the global markets through binary options and spreads. If you have a look at your webinar interface, you can see that small questions box, and please make heavy use of that box. Let me know anything that's on your mind. If you want me to explain something with a little bit more detail, just let me know. Or if you have any further questions, just let me know and I'll do my very best to answer those questions as we move through the webinar. Right now I would appreciate a very short yes or why in that questions box, just to let me know that both the audio and the screencast are working properly. David, Fasid, thank you very much. Really appreciate, guys. Thank you very much. All right, perfect. We seem to be good and rolling, so let's just get started. Today's webinar is scheduled to run for about half an hour. We have some room at the end for questions if you have some. And of course, before we get started, here are again our usual risk disclaimers that I need to make you aware of. So please take a moment of your time to read through them carefully and make sure that you are really comfortable with them. Essentially, this says that trading, of course, involves risk and that you should understand those risks and the instruments you are using before you're getting active in the market. As neither TradeWatt's position nor myself are investment advisors, nothing that we say should be considered to be actual investment advice. All examples are shown for educational purpose only, especially true for the live part of today's webinar. We will be having a look at the live markets which I think are quite interesting right now, might be moving, might be giving us setups in the future, but nobody knows for sure, so keep that in mind. It's always just for educational purpose. It's never a trade call. So please make sure you're okay with this, and we have also a further risk warning, this time coming directly from Nadex to you guys. Trading on Nadex involves financial risk and may not be appropriate for all investors. The information presented here is for information and educational purpose only and should not be considered an offer or solicitation to buy or sell any financial instrument on Nadex or elsewhere. Any trading decision that you make are solely your responsibility. Nadex instruments include forex, stock indexes, commodity futures, and economic events. Nadex binary options and spreads can be volatile and investor risk losing their investment on any given transaction. However, the limited risk nature of Nadex contracts ensures investors cannot lose more than the cost to enter the transaction. Nadex is subject to US regulatory oversight by the CFTC. That being said, let's just get started. Today's agenda, we want to have a look at a very brief introduction, what are binaries and what are spreads, especially here, of course, on the Nadex platform, and of course, what are the benefits and advantages of trading those instruments. Spread pricing and selecting the right contract, and practical spread and binary trading scenarios. We want to combine all of this as much as possible, looking at the live markets. I'm showing you a market which is moving right now, and then we explore together different possibilities on how this market might be tradable, both to long side and short side, always coming down to what is your personal take on what that market might be doing next. So let's just get started. What are the advantages of trading binary options and spreads? Binary options are a fairly new type of investment instrument, and if you already had an exposure to plain vanilla options, puts and calls, you may have realized that those might be a little bit difficult, a little bit intimidating. And binary options have taken those options and essentially made them quite a lot easier. In the end, you don't have to worry how deep in the money is something, how deep out of the money is something at expiry. In the end, it just comes down at expiry. Where is it trading? Is it in the money? If so, we have the yes event, the true event, and if it's trading below the strike price, for the example with a binary, it's the false event. And so you see we have just two types of events, true and false. Yes and no. And this is really just everything that binaries can be compressed down to. You have either a winning scenario or you have a losing scenario. And those two factors is the only thing that you have to worry about. The profitable scenario, with binaries, it's trading above the strike price. The losing scenario, you're trading below the strike price. And the good thing with binaries is, and with spreads as well, the moment you open your position, you know exactly how much you can potentially make if that trade is going your way. But more importantly, you know exactly how much you can lose when that trade is going against you. You have a completely risk-defined position. And this makes it very easy to adhere and implement proper risk management principles when it comes to trading binaries as your preferred investment instrument. Yeah, they offer an intuitive way to trade the financial markets with relatively low collateral. You have a very good leverage on trading those markets. Once again, you trade with strictly limited risk. You know your risk up front. You have low collateral that is required to open that account and place that trade. And you have opportunities to trade both in volatile and in flat markets alike. And yeah, with different expiry cycles available for your trading choices, you also have multiple daily trading opportunities setting up in those markets. That has been the straightforward, simple scenario with a binary. It's either in the money or it isn't. Yes or no. Now, some people might now say, wait a minute, with spreads this is becoming more complicated, isn't it? No, it isn't. Actually, spreads are also very, very easy to understand. With spreads, you just have to think about there's a certain range within which price actually moves alongside with the price of the underlying. And here you can see, and let me grab my laser pointer for that, here you can see that those spreads are defined by two levels. You have a level defined as the lowest point at which the spread can trade and the highest point at which that spread can settle. And just the same thing as with trading binaries. You know exactly upfront how much you can potentially make on that trade. And once again, more importantly, you know exactly how much you can lose on that trade. There can never be any nasty surprises. You know your risk upfront. And this makes those binary and spreads so powerful for your trading and risk management principles. With conventional trading instruments like futures, for example, or trading stocks, ETFs, you always have that risk of the market completely gapping against you. And your conventional stop-loss orders, they will be triggered and you will be taken out of that position. But with fast-moving markets, overnight gaps, there's a decent chance that these markets gap against you and your execution will be far worse than where your initial stop-loss placement has been. And that risk is completely gone when it comes to trading binaries here at Nadex. The idea is you know your risk up front and there's no way you can ever lose more than that initial amount of money that can be lost that has been shown to you in the first place. Sounds a little bit abstract. We'll take it to the platform in just a moment and I'll show you guys where you can see those figures and why this makes it such a powerful feature to be trading those contracts here. The benefits of spreads are they're definitely suitable for the retail trader looking for leverage and hedging opportunities. Trade with strictly limited risk. Once again, low collateral required to open that trade. You can take a highly leveraged position if it suits your risk profile, and once again you have multiple daily trading opportunities setting up in those markets. Now, quick overview, benefit, and what are those products actually, and I suggest we now take it directly to the live market. And just as always, if there are any questions, you guys let me know. I'll do my very best to answer those questions. Here we're looking right now at euro against the US dollar, and please let me make that a little bit larger here. Why do I personally think that this could be an interesting chart at the moment? And by all means, guys, I'm logged here into a demo account on the charting platform, and not once in a while, in just a very few moments I will be switching over to my Nadex account. This is as well a demo account. Keep in mind this is just for educational purpose. I do not want to suggest that any of those trades that I place here, I would be placing those in my private account. It's just for demonstration purposes to A, show you a way that I'm looking at those charts, and B, how easy it is to handle the platform and place trades, not only to initiate new positions, but also to close those positions with limit orders, just like you could trade around any conventional instrument position. So what we have here is euro against the US dollar again on a daily chart. we're looking here at this market on multiple time frames. Here's the weekly chart, and there we have the monthly chart. And usually I want to see that multiple time frames are in agreement. They show me and tell me that same message. And from the daily chart, the impression I'm getting here is this market currently looks to be rather strong. Why do I think it's strong? Well, we can see the market is in a fresh uptrend. We are making higher highs. If we compare those highs here, those highs are always higher highs. And the lows here are also higher lows. And this is exactly what we want and need to see if the market is in an uptrend, higher highs and higher lows. And essentially it's as easy as that to determine what is the current trend in those markets. Next thing that I want to see is that my moving averages are fallen into place. The 10-period moving average is above the 20, above the 50. They all have now started to rise. The 50 just recently, but all are rising. 200 still takes some time to fall into place, but however, this market currently is going up. Can also be seen by looking both at RSI and MACD. I want to see good momentum supporting that move. This is what I can see here. I'm not interested in any crossovers. I'm not interested in overbought and oversold levels. I just want to get the idea what the momentum is doing. Just a second. William is asking a very good question. Does the amount of units per contract change the outcome of the market? You have to understand that with those derivatives, you are never trading the underlying market itself. You never actually hold a position. In this example, you never actually hold a position in euro against the US dollar. You are just placing I don't like this idea of calling this a bet, but essentially is you're taking a position reflecting on the outcome of a price change. You don't have a position in the underlying market. So keep that in mind. So there is, from a logical point of view, there can never be an impact from your trades being done here on Nadex, on the underlying spot forex market. And keep that in mind. Forex spot market is such a huge market. All the big banks are there. All the huge global corporations are trading there. Even if all we people here on this webinar, and quite a lot are here, even if we combine all our buying power and try to move that market, not a snowball's chance in hell. So by all means, don't have this idea that the trades that you place here could have any impact on those markets. So you can be completely relaxed there. Brian is asking a very good question about strike selection with binaries and proper floor and ceiling levels for spreads. We will be talking about those in just a moment. So what I'm seeing on that chart is potentially on the daily chart a market which is moving ahead. We've seen this pullback once again into a buy zone. Prices have been pushing higher. So once again, higher high. However, we are a wee bit overextended now from a moving average buy zone. So let's have a look at those lower time frames and see if an opportunity might be showing there itself. And if we look at those lower time frames, we can see also nice uptrend, for example, here on the 15-minute chart. However, we have now, and let's make this chart a little bit larger. All right, beautiful uptrend. Deep pullback, and now we've just tried again to make another new higher high, and we have run into that same level here roundabout, indicated by those two pivot points that we see here. And you can see the moving averages have pulled back a little bit deeper than usual, and it seems that there might be some resistance there ahead, and also big divergence setting up here both in MACD and RSI. So one impression that one might get when looking at that chart is, on a shorter time frame, this might warrant a potential shorting opportunity. So let's switch over to the Nadex platform now and see how this market could be traded. And once again, it's just an example. It's not a suggestion to take a short position or to take a long position. It's just an example. All right, so we are trading right here now. And by the way, a good way to see where the market is trading is not just by looking at price. We can also look at price of the binaries. And what we can see here is that with this 1.08 price level, the market is trading with a mid price of pretty close to 50. And the idea here is you can think about the price of this binary option pretty much like delta of a conventional option, which means if it's trading at the money, if the underlying market is trading at the strike price of the option, that option will be priced pretty much close to 50. So good easy indication which of those options here is the closest at the money. Definitely the one here with a 1.08 strike price. Now I might think this market could be going down, and in that case I would want to sell potentially that market. The idea here is to open a sell ticket, and I could be just selling 2 contracts here. And now pay attention please. We can see here that my maximum loss would be 112.50 and the maximum profit would be 87.50. Where is my maximum profit coming from? Well, I'm selling 2 contracts, each for 44.50, and 2 times that gives me exactly those $89, which I'm seeing here as a max profit. What is my maximum loss? Well, I've sold something now for about $44. If it closes above my strike price at expiry, and this expiry is currently 3 hours and 43 minutes away, then this option contract will settle for 100. So I will have to pay 100 for something which I have just sold now for only 44. And this distance, this difference 2 times is my maximum loss, and here is my maximum profit. Now, one important thing to keep in mind when it comes to picking the proper strike price and which option actually to buy or to sell, you want to balance 2 things. One thing is you want to balance the probability that this trade might be a winning trade, and once again, price gives us a fairly good indication about the probability. Not the actual probabilities, just the underlying mathematical probabilities from the pricing model being used in order to price those options. Coming back to plain vanilla options, I already mentioned you can think of that price here, something like delta. And delta can also be interpreted as the probability that this trade will be in the money at expiry. And so that's the probability that we have to make work for us. But also we have to balance it with proper reward to risk ratio. And here you can see I'm risking now $111 for a potential profit of just $89. And this is not a good reward to risk ratio. Personally, I would like to see a reward to risk ratio of at least 1-to-1, preferably higher. Again, that's just my personal take on trading and my risk management plan. Yours might be completely different. You might say, that is perfectly fine with me. It completely comes down to your preferences. So let's just say I want to sell this contract now 2 times. I place that order, and again, it's just for demonstration purposes. That trade has now already been executed. I have that position now in the market, and it's just sitting there. So the idea is, okay, if this is not, if that position has not given me that reward to risk ratio that I have been looking for, why not pick something else? And this why not pick something else, we could be going now for a strike price which is deeper in the money. We could be going here, for example, for this 107.80. If we look at the chart, this is round about that price level. If I think that this move here might be stalling and price might be going lower, again, just one way to read the charts. There's never a guarantee for anything when it comes to trading. The idea might be, okay, is it rather likely that this price level here might be hit? Yeah, could happen. So I might be looking into selling that contract again 2 times. And if you compare those numbers now, my maximum loss is just $31. My maximum profit is 169. So from a reward to risk ratio perspective, this is a much better and nicer trade. However, price has to drop quite a bit, only to give me that winning position at expiry. With this 108 strike price right here, we are trading at this level right now. Price doesn't have to move very far, it just can stay there, or it has just to stay there. That would be enough. in order for this trade to work out, by expiry, price will have to drop so far. So price has to work more. It's a little bit less likely that price will be able to move into that area, again, just from a mathematical point of view. And this is why the reward ratio here is so much better. I'm paying for it with a reduced probability that this will might be a profitable trade. So let me just open that position here with, again, two contracts. And I don't have to wait now until this position expires. I can easily trade into and out of that position. And let me show you how I'm doing that. I'm just clicking now here in my open positions. I'm clicking on that position. The deal ticket opens up. And I'm here now in the buy. I want to close that position, at least a part of it. So I would be looking into buying just one contract, but I don't want to pay $92. Remember, I said that you can think of the price of that binary as delta. And I know that if the market has moved to the strike price, that option should have a delta of around about 50. So the price should be very close to 50. So I can already put in here my limit order to close that position, not for 92, but I'm willing to pay $54 just to scale out of that position and close just 50% of that position. So I'm placing that order right now. And you can see the trade is on. It's sitting here as a limit order. And if price starts to drop to hit this price level and the offer is trading at 54, that one the order will be filled. You can see it's a good to cancel order. So essentially, I've taken now care of that position. I could walk away from my desk. I could do something else. I could go to the gym. No need to be watching those markets all the time, just in order to take profits partially or even close the complete position. All right, let me just give me a minute. I want to see all those questions that you guys have been asking. So just a moment. Brian has been asking how far out can you make those spreads. You can see here those different strike prices being available, and you just, as I like to say, you pick your poison. It doesn't make sense to go, at least for me, to go so far here out of the money. Always remember, you have to balance the time that is still within those options, 3 hours and 37 minutes, with the distance that the market has to travel in order to hit that level, in order to give me a profitable position. Now, what are your settings on MACD? We are using all those indicators with the default standard box settings, which is for MACD 12, 26, 9. I'm only interested here in the black MACD line. I'm not interested in this in the signal line. I'm not interested in the histogram. And for RSI, we are using the default settings for of 14 periods. And I do not care about the overbought and oversold levels. Reading those questions further. And Brian, thanks for clarifying that question. Here you can see which options are available for your trading. And with binaries currently, I have to apologize, the timing of this webinar right now is not a perfect spot, because right now all the spreads that would have been available the complete day for trading actually just have expired, so I can't be showing you those spreads right now. If you log into your account tomorrow morning and have a look at those spreads, you can see that there are a lot of different spreads available for your trading. Right now it's just the binaries, but here with the binaries you have more options, especially here with forex. You can pick different expiry cycles, and you also can go out here to the weekly, for example. And what we also could check right now are our indices, and here with those indices we currently do have spreads. Yeah, perfect. This spread here currently still, for example, has 50 minutes left. Why not take that opportunity and have a look quickly have a look at one of those spreads. So let me briefly switch over back here to the charts. And guys, by all means, I just showed you now that potential short trade here on euro US dollar. a long trade, it always comes down to your personal preferences. So by all means, if you want to take a long position here, it's your call. Just to balance things, wait a minute, let me just quickly go back here and just show you how easy it would have been in the weeklies, for example, of Euro US dollar, to just say the big picture overall is long for me. So for that idea, I might be going here to just take another trade here on Euro US dollar. This time, that option I've gone now for a different expiry cycle for the weekly. I still have 2 days left here, and I might be just interested to buy one contract here, risking $27.25 for maximum profit of 72.75, placing that order. And you see how easy it has been to just go into to take a long position there. Again, just for the sake of demonstration, not a trade call, not going in any direction here. Now, quickly, let's have a look at the S&P 500. And the S&P 500 is right here. Interesting market right now. We are pretty much sitting here at the top. We have pulled back. Today's price action looks a little bit bullish to me. It's a red candle, yes it is, but all this move here to the downside has been rejected by the market. And if you see where we're trading right now, we're trading right now just below this level here. So actually this might be setting up here for a potential bullish setup here on the daily chart. Again, your assessment might be completely different. So let's have a look at the US 500, and let's have a look here at this at those spreads. And you can see now the market is currently trading at 2,271. And now, which spread do I actually pick? I want to pick if I think the market might be going higher, I'm looking for a spread where the floor level is as close to where the market is trading right now. So 2,271. I could be going for this one here, 2,240, 2,280. However, if you see where we are trading there, I'd only have 10 more points left until I hit the ceiling. This would not be a good idea. This might be not be the perfect spot to be in. I think the market might be going higher, and so I want to have a lot of room above me for that spread to appreciate in value while the market could potentially be rising. So for that reason, this one here is not the perfect one. The next one might actually be looking better. You see the ceiling, the floor level of this one here is 2,260. So I'm already 10 points into the range of that spread, but I still have a lot of room ahead of me. I have still 30 more points for this market to move higher. So this might be a sweet spot here. However, the next higher one, we are currently trading below the ceiling, below the floor level. So it has to move at least 10 more points. The market has to move at least 10 more points in my direction just in order to be trading at the lower level. So not very attractive with just 46 more minutes left. So for the time being, this one here might just be the sweet spot. Your assessment might be completely different, and I could be looking into buying this market if I think markets might still be going higher. And I want to buy this market at that price potentially. What can I lose? Once again, I know exactly how much I can lose in advance. If I open that position, my maximum loss would be $113. However, if price pushes higher and hits the ceiling level within the next or at the next 45 minutes, at expiry is trading above the ceiling, then my maximum profit would be $287 on that trade. So just for the sake of completeness, let's place that order. And if you think for a moment, no, that's not what I'm looking for. I want to go for something else. And let me quickly check if those are already in here for... No, those are on the same expiry cycle. So let's just say, okay, I want to offset this with a potentially other trade. Now I want to have a short position I want to be as close now to the ceiling as possible, and then this trade here might be just the one I'm looking for, because here my ceiling level is 2,280. We're trading at 2,271. Very close to the ceiling, but now I have a lot of room to the downside. So if you think the market might be going lower, you potentially could think about selling that contract here. Let's say you're selling that contract here for 2 times. What's your maximum loss? Once again, you know it in advance, it's $182. Your maximum profit would be $618. So you see how easy it is to open those positions, and once you get the hang of those spreads, essentially you just have to think, okay, I want to be long that market. If I want to be long that market, I'm looking now for a spread that fits first my expiry cycle, and that puts me pretty much as close to the floor of that spreads range. However, if you think you want to short that market, personally I would be looking for a spread which puts me as close to the ceiling as possible, so that I have a lot of room to the downside to participate in a potential drop of the market. I hope this makes sense. Now just reading those other questions, but I think we're looking good so far. Alright guys, any more questions from you guys? And while you might be typing those questions, we're already done now for the half hour. Let me quickly switch back here to the platform, sorry, to my last slide. Thank you very much for tuning in. If you have to leave right now, I hope you enjoyed today's webinar. You found it useful, learned something new, enjoyed a look at the markets with a different pair of eyes, to put it that way. Yeah, and as usual, after this webinar, there should be a short survey. So if you would really appreciate if you could give us some feedback there. We're running those presentations for you, so anything that helps us to tailor our presentations to meet your needs is really appreciated. Those of you who have to leave, thank you very much for tuning in and the great participation and the good questions you guys have asked. And now to all of you, a great day, happy trading. Thanks again, take care, and bye-bye.